Hello and welcome to the trade setup. In this video we are looking at D-Wave Quantum. It is time for another update, and on this chart we have been tracking this beautiful impulse where we expect still substantial continuation to even higher prices. Whether that is within the current count where we are looking for still another high within this wave to the upside, or if it is within a larger wave 3 top already being in place and having a larger wave 4 correction. That doesn't really matter. As long as we hold the levels of support, we can still track continuation to higher prices, and we have plenty of those. But for now, let's focus on the actual pattern, on the actual structure that we have at hand that we can track rather than potential larger corrections. And here we have been focusing on this idea of a series of 1-2 setups to begin with, and we have this as a potentially larger wave 3 that would complete sooner rather than later. It is possible that even once we have this next wave to the upside complete, we could be looking still for even another extension part of this wave 3, but I wouldn't necessarily concern myself with that at this point in time. Now, in this wave 3 that we are tracking, we are looking at a wave 1 up, a wave 2 down, a third wave up, fourth wave down, and a fifth wave within an ending diagonal. Within this fifth wave in the ending diagonal, we are towards the end of this expected uptrend, where we have already built the wave 1, 2, and 3, and we are looking for the wave 4 correction. We have failed to hold our initial attempt for a bottom in this wave 4. It would have been really ideal to have extended directly higher from that area in the fifth wave, but yeah, we got an extension and we cannot change that. Now, before we get into the smaller time frame, I wanted to quickly mention our channel newsletter. The link is in the description. It is completely free. We will have our monthly top picks and potentially other updates, as well as the opportunity to join our Discord server among the first when it launches. And in addition to that, we also have our channel memberships. If you enjoy the content and you want to support it, it is available. You can click the link in the description or click the join button. You can check out the video and the perks that come along with it. And now back to the actual structure. So, in this wave 4 correction, we have been tracking continuation in a fifth wave against the $12.8 level. We have had this area of support ever since we actually topped within this wave 3. We have been tracking this uptrend very nicely as we were pushing higher and higher, and we had this expectation once we were going to top within this wave. So, we have had already a potential ABC pattern complete within this area. We didn't need any additional extensions lower, but we didn't manage to hold the uptrend to higher prices. We completed another correction and we got an extension to lower prices. Now, the thing is, within this pattern, we have a couple of options. Ideally, I would like to see this unfold as a wave Y, although I cannot rule that when we get a completion of this wave to the downside, we get a wave 4 correction and another fifth wave to take us to even lower prices, in which case it would form a wave C. But fortunately, there is some confluence between the expectation for a wave C within this area and a wave Y. So, internally, actually, let me remove this area of resistance to the side so we can see better. But internally, within this pattern, we have been tracking a potential A, B, C movement to the downside. And I have been preferring this as a wave A because I would actually like to track this as a 5-wave pattern. And then in this structure to the downside, we don't have an impulse, meaning it cannot be a wave 3. Because if we started with the wave 1 as a 5-wave move, we cannot look for the wave 3 to be a 3-wave move. The wave 3 must absolutely be a 5-wave pattern and it must be an impulse. Now, I would not necessarily hold it against the structure if we managed to still form this as a wave C to the downside. I would be open to tracking the idea of a potential A, B, C structure in a wave 1, have a wave 2 correction, and overall track this entire pattern to the downside as an ending diagonal within the wave C. But in either case, I would still be looking for another low before I would consider this count to be clearly full. Whether that is where we have a wave 4 to the upside in this wave C within the wave Y, and then a fifth wave down, whether that is we have already bottomed in an internal wave 3 and we get a large wave 4 and the fifth wave part of a wave C to the downside instead of a wave Y. In both cases, we would track a very similar area of resistance and we would still be looking for another low as long as we don't break the relevant resistance levels. Now, before I provide that, I would like to go through the developments since the previous video, and within this area, we have been tracking a couple of ideas. So, we were looking at this as an ABC structure within a wave 3. Within this wave C, we were considering a potential bottom in a fifth wave already in place. We didn't need any additional extensions higher, but we did track an area of resistance for a potential extension in this wave 3 within an ABC pattern. So we did end up holding the area of resistance and extending to lower prices. However, I would still not consider this to be a wave C to the downside. I would still be looking at this as a 3-wave pattern, in which case I would still like to consider this as a 5th wave part of this larger wave 3 complete, and that now we can look for the wave 4 correction in a more direct fashion. So, for this structure, I'm not looking for any additional extensions lower within this wave 3. We can even remove the internal counts now, just to make it simpler to track. We are, however, looking for an area of resistance for a wave 4 correction at the levels between the $19.6 all the way up to the $24.8 level. As long as we are below the 61.8% retracement, we cannot rule out the possibility of a wave C extending in yet another low in a 5th wave within this area. And in this expectation, we would have pushed perfectly into the 38.2% retracement, which is the ideal target for a wave 4. Now, I see that we didn't actually touch it. We might get another high, we might not. In the end, we did get into the area of resistance, and it is around this level, around the 38.2% retracement, we often find ourselves top within a wave 4. Now, in the eventuality that this unfolds as a larger wave C to the downside, we might be looking at a more substantial correction in this wave 4, and we might see something like an ABC pattern unfold within this area. Not ruling out the possibilities necessarily, I'm mostly focused personally on the area of resistance. I would expect a full count against the 61.8% retracement, and in the case where this would be a 1, 2, 3rd, 4th, and a 5th, I would need to slightly adjust the area of resistance, but this is the nice part. It is very much within confluence because we would only shift it by 40 cents or so, yeah? And in this case, we would be watching instead the $25.2 level, yeah? Not a substantial shift, and we are still looking for another low to the downside. So at least we have some levels of confluence within this area that would allow us to have some additional confidence in the structure we are tracking. Now, if you remember, in the previous video, I did provide you an ideal target for this additional wave to the downside. It is the 100% extension of the wave W or the wave A, whichever scenario it might be, that is at around the $12.8 level, very much in line with the 61.8% retracement. Once again, we don't need to get there. This pattern doesn't need to extend that low, and in fact, in the case of the internal structure within this area, I would strongly prefer that we don't reach that level. We do have some additional structural support we have formed in these previous swing lows, so we might form more substantial bottoms as we break them, yeah, between the $14.8 down to the $13.6. And I don't see them as levels that are not expected to be broken, but I see them as areas on the chart that would help in forming more substantial bottoms. Now, with that said, in the smaller time frame, I cannot really provide you any high probability area of support for continuation to higher prices, but we could be looking for the support levels down to the 78.6% retracement, also as a signal that a more substantial top would already be in place, and that is the $17.8. So we don't want to see a break below that for continuation to even higher prices within this supposed wave 4, or yeah, the other supposed wave 4, doesn't matter exactly. But for now, I wouldn't be surprised to have started a larger correction. We did after all push in this previous swing high, where we did form these previous tops, and we do start to see some weakness. I wouldn't necessarily consider this consolidation, but again, don't focus too much on the exact count, on the exact structure, especially within such a small time frame. Watch the levels of support and the levels of resistance for evidence. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.